Rohr here with an early global view on Thursday, February 5th, 2015. It's currently 7 a.m. U.S. Central Time, and we're coming a bit later than usual because we really wanted to assess some major macro factors like the ECB Greece confrontation that knocked the equities yesterday and the European Commission economic outlook upgrade that is helping them this morning. And we'll be back to all of that momentarily. So, what does all this mean to the markets? Well, this can be, for all it's a global view, it can be pretty concise because a lot of this relates to things we had been looking at previous. And here's the S&P 500 future, hourly on the left, 30-minute on the right, as usual, with indicators below. And what we have is an S&P 500 March future that's back up to 2042, pardon me, this morning, up 12 on the day. It's been up to 2046. So once again, after straining against it out of late Tuesday into yesterday, and seeming to want to escape above 2036 to 40, which is an important, failed Fibonacci level, but even more so, very important historic congestion, even going off earlier than this chart shows, going back historically. It is just a market that seems to want to keep the bid, but it's very erratic. There's a lot of risks out there based on the European influence. So, we're just taking a bit more of a circumspect view. What we will say, if the market does a better job of closing above, let's say, Tuesday's high at 2044. There is some further resistance as nearby as 2050, and again up into the 2060 area, and you could see that going back to the 22nd. This was in front of the ECB, of course, or pardon me, in the wake of the ECB. The market put in a high post, so 2050 and 2060 are still important, but the higher resistances historically are going to be up into 2078, and the trading high up at 2088.70, going back to the very end of last year as the market peaked out on the positive influence of the Fed and ECB anticipation. Lower supports remain 2025, and it's interesting that in the overnight trade, this market only got down to about 2021, back around the recent top of the recent gap higher, and was not below 2025 for very long, even in the overnight trade. And of course, the bigger lower supports are back down to 2013, 2000 area, and the major 1985 to 78 support. The other thing that's key, if the market keeps the bid today by any degree, back above 2040, is it's going to keep this hourly MACD out above the upper runaway band. That's going to still favor the bulls. It's almost burden of proof on the bears, even after the knock the market took yesterday to get it to fail back below the 2036 area. It couldn't really get below in any meaningful way later on in the session yesterday. 2036 to the congestion at 34 area now. And that pretty much does it for the short-term view of the S&P 500.